Hello, welcome to my channel, my dear friends. My name is Avilash and I'm a trader next door. In this video, I'll be analyzing the chart of USDjpy, US dollar Japanese yen for Monday. So if you're watching my videos for the first time, then please subscribe to my channel for regular market analysis and do check out the Forex analysis playlist on my YouTube channel for the analysis of other pairs like Euro USD, GBP USD, Gold USD and many more. So let's get started. So this is the Forex chart of USD JPY in front of us right now. And before we proceed, I would like to tell one thing, that my dear friends, your analysis may be different. You may be thinking that I'm wrong here. Okay, if you feel that way, then please write down in the comment section, because whatever I'm about to share is my opinion, and I share my opinion considering that most of my viewers are beginners. They are new to trading. So as a result, I only prefer to share the safest trading opportunities only. So if in any case, if you think that, or if you feel that I'm wrong, my analysis is wrong, then please write down in the comment section. I would love to learn from you. So let's get started. So as we all know, USD JPY was in huge uptrend last week, and after reaching this particular level, we saw some selling or profit booking on USD JPY on Friday. So if we just observe the chart here, okay, then there should not be any doubt regarding the trend of the market. You can clearly see that market is still in uptrend, and market is still in uptrend. And as we all know, the first rule, the basic rule of the market is follow the trend. If a market is in uptrend, we should mainly look for buying opportunities, and if a market is in downtrend, we should mainly look for selling opportunities. And looking at the present trend of USD JPY, we should mainly look for buying opportunities, because until and unless, my dear friends, until and unless we get an inverted V formation, complete inverted V formation, we cannot consider it as a trend reversal. Yes, there almost we have an inverted V right now, but the thing that we need to focus here is that on Friday, market closed at the 38.2% retracement level. Generally, I do not talk much about Fibonacci, but yes, Fibonacci also works sometimes greatly. So in this case, we can clearly see that, and previously also we have seen that Fibonacci was working on USD JPY, and on Friday, market took support at this Fibonacci retracement level of 38.2%. And in case after the market opening, okay, so in case after the market opening, market slips also, USD JPY goes down also, then we have also a 50% retracement level at wait I'm confused about the number. What is this level here? Okay, it's, we have 50, no, see, this is the 50% retracement. Sorry, I'm extremely sorry, I'm confused. Okay, it's 110.60. At 110.60 we have got 50% retracement level, and we have 110.95, we have got 38.2% retracement level. So listen to me carefully. If market bounces from the 38.2% retracement level on Monday, okay, then you can initiate a small buy position with proper risk management and stop loss below this level. Why I'm saying is that because we have seen USD JPY respecting the Fibonacci level, so you can initiate a small buy position with proper risk management by risking only 2 to 3% of your trading capital. You can initiate a buy position. And on the other hand, after the market opening, if it breaks this level of 38.2% retracement level, do not buy. Do not click on the buy button and just wait for the market to come and test the 50% retracement level of 110.60. So once you see market is testing this level of 110.60, just observe the price and the market. If you find market bouncing from the 50% retracement level, then you can go for a buy. Listen to me carefully, you can go for a buy if market bounces from the 50% retracement level. And if you do not want to buy, if you want to avoid USDjpy, you can avoid USDjpy completely. But as of now, I am not giving any sell order or any sell position, because still the market is an upturn, and I think selling is not on my card. Because listen to me carefully, because see, if we short the market here, then we do not have any proper resistance here to put the stop loss. Our stop loss will be above this level, and our risk to reward ratio does not match, and that is the main thing, that I am not going for any shorting position here, because my risk to reward ratio, your risk to reward ratio does not match much. And if you short here also, then at most you can place the stop loss above this line. So we do not have any proper logic here. So just go for a buy if market bounces from the retracement level of 38.2%. If you do not want to buy, if market breaks the level, you can go for a small buy at the retracement level of 50%. So if market bounces from the 50% retracement, you can also buy. And in case you find market forming big fat red candles, okay, if you find market forming big fat red candles, then you can short the market. Okay, you can short the market if you find market forming big fat red candles. Then it will be a confirmation to us that the market is under the dominance of sellers. Okay, let's see what the market does, where the market goes after the market opening. So bye bye, take care, see ya on Monday.